Good day, everyone. We are the Group 5 and we are tasked to report about the Chapter 9, Auditing the Revenue Cycle. So, this chapter examines audit procedures associated with the revenue cycle. The chapter is divided into three main sections. It begins with a review of alternative technologies used in both legacy and modern systems. The focus is on the key operational tasks performed under each technological environment. So the three main sections were the revenue cycle activities and technologies, revenue cycle audit objectives, controls and tests of controls, and the substantive test of revenue cycle accounts. So on the first one, this section examines the alternative information technologies used to support revenue cycle activities. The first of these is a sales order system that employs batch processing and uses sequential files for storing accounting records. This is an example of an early legacy type system. This approach characterizes the era of data ownership in which files were designed exclusively for the use of a single user. So batch processing using the sequential files. And the manual procedure, it begins with obtaining and recording the customer's orders. Secondly, approving credit, and followed by the processing shipping orders. Under processing shipping orders, it records the shipment in the shipping log, followed by sending the stock release documents and shipping notice to the billing department as proof of shipment. Thirdly, files one copy each of the bill of lading and the shipping document. So in the automated procedures, it begins with the key punch or the data entry. This involves the usage of computer. Data entry is the inputting of data or information into a computer using input devices, followed by the edit run, which the edit program is the first run in the batch process. Under the sort run, it is the physically arranging of the sales order transaction file sequentially by account number. So in the AR update and billing run, the AR update program posts to accounts receivable by sequentially matching the account number key in each sales order record with the corresponding record in the AR SUB file. Under the sort and inventory update runs, the inventory update program reduces the quantity on hand field in the affected inventory records by the quantity sold field in each sales order record. Under the sequential file approach, the general ledger master file is not updated after each batch of transactions. So this figure here is the overall summary of the batch processing with sequential files. Next alternative information technology is the cash receipt system. So it is the review of the operational features of a cash receipt system that employs batch processing and uses direct access files. This configuration is found in both modern systems and late-era legacy systems. The direct access file approach offers operational advantages over sequential file processing and permits limited data sharing. So it starts with the mailroom, which separates the checks and remittance advices and prepares a remittance list. On the cash receipt department, the cash receipt clerk reconciles the checks and remittance list and prepares the deposit slips. On the account receivable department, the remittance advices and remittance list are received and reconciled by the AR clerk. In the data processing department, the batch software reconciles the journal voucher with the cash receipt transaction file at the end of the day and updates AR SUB and general ledger control accounts. The earlier mentioned direct access method is used in these procedures. Finally, the machine generates the transaction listing which the AR clerk compares to the remittance list. Next is the real-time sales order entry and cash receipts. This involves the order entry procedures. First is the sales procedures. The clerk performs the following tasks in real-time mode. It performs a credit check online. It accesses the inventory master file and checks the availability of the inventory. And lastly, it transmits an electronic stock release record to the warehouse. So under the warehouse procedures, the warehouse clerk's computer prints a hard copy of the electronically transmitted stock release document right away. The clerk then selects the items and sends them to the shipping department along with a copy of the stock release paper. So in the shipping and billing procedure, the products, the stock release paper, and the hard copy packing slip created on the terminal are all reconciled by the shipping clerk. After that, the clerk then chooses a carrier and prepares the goods for shipping. In the real-time order entry and cash receipt procedures, first is it receives cash. Second is remittance advices are sent to the AR department. And lastly, assigning of remittance number. Some of the advantages of the real-time processing are shortens the cash cycle of the firm, gives the firm a competitive advantage in the marketplace. Manual procedures tend to produce clerical errors, and lastly, reduces the amount of paper documents in a system. Figure 9.6 shows the point of sale system. It is used extensively in grocery stores, department stores, and other types of retail organizations. In this example, only cash, checks, and bank credit card sales are valid. The organization maintains no customer accounts receivable and inventory is to keep on the store shelves, not in separate warehouse. The customers personally pick the items they wish to buy and carry them to the checkout location where the transaction begins. With the daily procedures, it begins with the universal product code scanning. After it, the calculation of taxes, discounts, and the total for the transaction. Credit card voucher is then prepared. The transaction is entered in the POS system. Supervisor then unlocks the register and retrieves the internal tape. The cash drawer is removed and replaced with a new cash drawer containing a known amount of startup cash for the next clerk. It prepares a cash reconciliation form and then files the credit card vouchers and secure the cash in the safe. In the end of the day procedures, the cash receipt clerks prepares a three-part deposit slip for the total amount of the cash received. Lastly, a batch program summarizes the sales and cash receipt journals, prepares a journal voucher, and posts to the general ledger accounts. So the transaction below is a sample of the end of day procedures and the transactions that are being posted on the general ledger account.
On to the next topic, we'll be talking about the revenue cycle's audit objectives, controls, and test of controls. The previously discussed management assertions are important details to the audit objective of the revenue cycle. A preview of the relationship is as follows. So this basically sums up the revenue cycle's audit objectives. Next is controls, which are generally divided into input controls and output controls. So first is the input controls, which are designed to provide reasonable assurance that data received for computer processing is appropriately authorized and converted into a machine-sensible form. The following are input controls related to the revenue cycle. First is the credit authorization procedures. The credit transactions with those customers who the credit manager concludes to have fallen short of the management's credit policy shall not be processed further. When computerized, just like what we did in the SAP training, the software verifies credit by comparing the receivables from the customer with that of the credit limit and have the personnel decide to either grant or reject credit as per company policy. So how do we test this credit authorization procedure? This responds to the valuation allocation and accuracy assertion. So first is if determine if there are effective audit procedures, communicate analysis with the credit policymaker, review periodically, and revise as necessary. Auditors may also use test data or integrated test facility where dummy accounts are created to test if they are rejected or granted by the system when they exceed the program credit limit. Second, input control is the data validation controls, which make sure that the data entered is consistent with the associated program logic and only allows correct data to be saved. So the following validation tests were discussed by Chapter 7, which are relevant to the revenue cycle. So I will not be further discussing this. We'll be tackling next the testing for validation controls, which answers to the accuracy assertion. Central audit issue is whether the validation programs in the data editing systems are functioning correctly and are serving their purpose well. So if the auditor analyzes it as effective through other quality controls, substantive test may not be called for. If not, auditors may once again use test data, creating dummy transactions, both correct and erroneous, and see which erroneous data can pass through the system. Next control is the batch control, which manage high volumes of transaction data through a system and reconcile output produced by the system with the input originally entered. So important element of batch controls is the batch transmittal sheet, which contains the following, providing for the following assurances. So how do we test batch controls? Answering the completeness accuracy assertions. First, batch control logs, which are sorted online in text files that can be read by word processing and spreadsheet programs. Second, there should be batch control totals, wherein the total of a given batch is the same throughout all the processes. If not, there may have been some missing data or transactions which have not been processed correctly or have been misplaced. Second, next, input control is process controls, which include computerized procedures for file updating and restricting access to data and may include physical manual tasks. Next is file update controls, which comprise of the following. First is transaction code controls, which mainly prevents over or misstating accounts by ensuring correct transactions are processed. Second is sequence check control, wherein a sequence check control should be in place to compare the sequence of each record in the batch with the previous record to ensure that proper sorting took place. Out of sequence records should be rejected and resubmitted for subsequent processing to allow the other records in the batch to be properly processed. So, testing for file update controls answers to existence, completeness, and accuracy assertions, which may be done through test data to test transactions codes and sequences. Next is access controls, which prevents and detects unauthorized and illegal access to the firm's assets. So testing access controls answers to almost every assertion. So access control over revenue cycle application depends on effectively controlling access to the operating systems, the networks, the database with which they interact. So the last input control is the physical controls, which comprises of the segregation of duties, supervision, and independent verification as shown. So how do you test for physical controls? The auditor's review of job descriptions and organizational charts and observing physical processes can disclose incompatible tasks. Review of systems, development and maintenance controls, and by reviewing organizational structure helps in verifying integrity of the computer programs that perform revenue cycle related tasks. So the next is the output controls, which addresses what is done with the data and should compare output results with the intended result by checking the output against the input. So an important element of output control is the maintenance of an audit trail. The following are examples of audit trail output controls. First is the account receivable change report, which is a summary report that shows the overall change to accounts receivable from sales order and cash receipts. Second is transaction logs, where it serves as permanent record of valid transactions and scratch rejected ones, transferring it to the error file. Transaction listings, these are listings which should go to the appropriate users to facilitate reconciliation with input. Fourth is log of automatic transactions, wherein all internally generated transactions must be placed in a transaction log and a listing of these transactions should be sent to the appropriate manager. Fifth is the unique transaction identifiers, wherein each transaction is processed by the system must be uniquely identified with the transaction number to easily identify records and trail for auditing. Error listing, a listing of all records should go to the appropriate user to report error correction and resubmission. So how do we test for these output controls? First can be reviewing summary reports for accuracy, completeness, timeliness, and relevance of the decision that they are intended to support. Second is data extraction of software. The use of data extraction software, which can be used to serve log files for specific records to verify the completeness and accuracy of output reports.
Good day everyone, today I'm going to present the substantive test of revenue cycle. But before that, let us know why we need to have substantive test for revenue cycle. So here's the revenue cycle risk and audit concerns. First, recognizing sales revenues before they are realized. Second, failing to recognize period end cutoff points. And then the underestimating the allowance for doubtful accounts and so on. So this topic has three sub-components which composes first, understanding data. This involves assessing and extracting data from accounting files for analysis. Thus, the auditor needs to familiarize and as well as the physical characteristic of the files that contain them. A description of each file follows. For the customer file, it contains address and credit information about customers. Sales, invoice, and cash receipts file contains summary data for each invoice. Line item file contains a record of every product sold. Inventory file contains quantity, price, supplier, and warehouse location data for each item of inventory. For the shipping log file, record of all sales orders shipped to customers. The discussion that follows presumes that the auditor is using ACL for performing the audit test. We've done already what is ACL because it was discussed in the previous chapters. So the second one is testing the accuracy and completeness assertions. It involves three things: the review sales invoices for unusual trends and exceptions, sales invoice and shipping log files for missing and duplicate items, and the line item and the inventory files for the sales price accuracy. So the first one, for example, scanning accounts receivable for excessively large balances may indicate that the organization's credit policy is being improperly applied. Thus, the auditor can use ACL stratify feature to identify such anomalies. The second one, duplicate sales invoice records may indicate a computer program error that materially overstates sales and accounts receivable. Thus, ACL is capable of testing a designated field for out-of-sequence records, gaps in sequence numbers, and duplicate values for the entire file. The next one is the review line item and inventory files for sales price accuracy. Significant discrepancies between the suggested retail price and the price actually charged, however, may indicate incompetence, clerical errors, or sales personnel exceeding their authority. The next one is the testing for unmatched records. There are two sources of unmatched records, which is the first one is the value of the item filled in the line item record is incorrect and does not match any inventory record. The second source is the inventory file. The presence of inventory records in the unmatched file means that there were no corresponding records in the line item file. The next is testing the accuracy, testing the existence assertion. So it involves three things: selecting accounts to confirm, preparing confirmation requests, and evaluating and controlling responses. So selecting accounts to confirm involves consolidate the invoices by customer, join the files using ACL's feature, and select a sample of accounts which has two methods, the random and the monetary sampling. The random, regardless of the size of the accounts receivable balance, everyone has an equal chance of being included in the sample. For the MUS, with large customer account balances, the auditor may select MUS, which will produce a sample bias toward the larger dollar amounts. So here's the sample letter of a confirmation request. It includes the end of period date, the amount, the name of the entity, and the customer name. And after the letter given, the auditor in maintaining control over the confirmation process is critical to its integrity. Evidence provided through confirmation is less reliable when contact between the auditor and the debtor is disrupted by client intervention. Thus, the auditor should retain custody of the confirmation letters until they are mailed. The confirmation letters, together with self-addressed stamped envelopes, should be addressed to the auditor rather than the client organization. Third one, the confirmation request should be mailed by the auditor. If client mailroom personnel participate in the process, they should be adequately supervised. So the last one, control, is testing the evaluation and allocation assertion. The auditor's objective regarding proper evaluation and allocation is to corroborate or refute the accounts receivable or stated at net realizable value. To achieve this objective, the auditor needs to review the accounts receivable aging process to determine that the allowance for doubtful accounts is adequate. Thus, the larger the number of older accounts that are included in the organization's AR file, the larger the allowance for doubtful accounts needs to be reflect the risk. By that, using ACL accounts receivable aging feature using the sales invoice allows aging report provides a clear picture of the accounts receivable composition. Thus, the auditor's objective is not to assess the collectibility of each account, but to determine that the methods used by the credit manager to estimate the allowance of doubtful accounts is adequate and that overall allowance is reasonable. That's it. Thank you.